Euro dollar. So the euro remains pressured to the downside after recently taking out some key medium-term resistance at 110.87, and the focus from here is on a fresh downside extension back towards the July base at 108.09. At this point, key short-term resistance comes in the form of the high from Tuesday at 110.79, with the break above to potentially open the door for a bit more of a corrective rally before the market stalls out again and heads lower. Any rallies are seen very well capped now into the 113 area. Sterling dollar. So cable continues to show signs of topping out with a fresh lower top now looking to be in place just above 155 as the market rolls back over and heads closer towards that recent base at 151.07. At this point, look for any rallies to be very well capped ahead of 154, while ultimately only back above recent highs that we saw up around the 155.10 area would force a shift and potentially delay the bearish outlook. Dollar yen. So dollar yen has recently stalled out ahead of critical medium-term resistance at 121.74, and this stalling out now keeps the pressure on the downside, with the market still confined to a broader bearish consolidation and potentially now exposed back down towards recent range lows in the 118 area. A break below that 118.10, 118.06 area low that we saw, the 118.06 low that we saw on the 15th of October, would then accelerate declines back towards the August base at 116.12. Ultimately, the focus is on the downside while the market holds below 121.74 on the daily close basis. Euro Swiss. So Euro Swiss continues to consolidate over the past several months, though the market is in a recovery mode following that recovery that we saw from earlier this year off those fresh record lows. At this point, additional upside is now seen above recent highs at 110.50, above which will expose 112 further up. Ultimately, only back below 107.14 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie dollar is firmly locked within a downtrend, and the market has recently stalled out in a recent recovery rally up towards the 74 area, with the market now trading back down towards recent multi-year lows just over 69. At this point, look for rallies to continue to be very well capped ahead of 74, while ultimately only a break back above 74.40 would compromise the bearish outlook. Dollar CAD. So dollar CAD has been very well supported in recent trade by some previous critical resistance now turned support in the 128 area, with the market bouncing firmly off that level and heading back towards the recent 11-year high at 134.57. Look for a bullish continuation now to be confirmed on a break above 134.57 and towards the 140 area further up. At this point, any setback should be very well supported into the 130 area. Kiwi dollar. So Kiwi looks to be slowly carving out a top after stalling out from an impressive recent correction up towards the 69 area, and the market could accelerate to the downside on a break and close below the 67 area on Wednesday. At this point, any rally should continue to be very well capped ahead of 70, while ultimately only a break and close back above the 70 area would put the pressure on the top side. SPX 500. So the S&P 500 continues to play around with the 78.6 fib retracement off of the record high move from May down to the 1833 August low. At this point, though, the recovery has been quite significant, and if the market is going to put in a lower top, now is the time to do it around the current levels in favor of a bearish resumption. If we do see a close and a break back above recent highs in the 2081 area, this could suggest that the market is poised for a full retest and a full retracement back to the record high from May at the 121.38 area. Gold. At this point, gold continues to look constructive. Any setbacks have been very well supported, and following that break that we saw several days back above 1170, the market had confirmed a medium-term higher low at 1100, which should open the door for fresh upside towards the 1233 area in the days and weeks ahead. At this point, look for setbacks to continue to be very well supported ahead of 1135.